Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar. And the title is Trading Prospects Mapping Out Your Week Ahead. Special welcome to the new people, and I'll explain what this webinar is all about. First, I would like to introduce myself briefly. This is me, Simon Friedman. I'm a senior account manager with AvaTrade. My overall experience in trading, it's over 23 years. It was like yesterday that I came to Wall Street. And I worked for the first 11 years as a prop trader in few Wall Street firms. And after that, I moved out and continued trading, of course, and started to mentor and educate others. And currently, I'm very happy that I have a great opportunity to assist our customers at AvaTrade. So the agenda, what we try to do here is pretty much create the plan for the week. And from any aspect of life, if you do spend a little bit of time, I think they proved it scientifically. If you spend a little bit of time on planning, there's more chances for success. So that's what we're trying to do. We try to analyze the last week, see what happened, what effect the market had on the news or any fundamentals. We go through economic calendar, and then we'll look at technicals on indices, stocks, commodities, and forex. Today we'll be talking about general indices that will follow a few stocks that includes Uber, Disney, Apple, Microsoft, Walmart, Facebook, Intel, banking sector, and pharmaceuticals. We'll also be discussing oil, gold, natural gas, and some other commodities, and the currency pairs. And we'll end up with taking a look at cryptos. Before we go any further, this is a risk warning. You can find a full statement at avatrade.com. What we do here is simply educational. We do not suggest any trades, of course. Now, these are the channels that I would highly recommend for you to subscribe to. You have Telegram, you have Twitter, or it's called X now. I like Twitter better. YouTube channel is my favorite. You can find a lot of information there that includes educational material, tutorials, and the webinars that you missed or you couldn't make it. You can come to YouTube and watch the recordings at the convenient time. So please subscribe, click on that bell. You'll be notified when new things are coming in. And of course, if you are watching this on YouTube, please write a few words of feedback. If you like it, you didn't like it, why, and so on. That would really help me to improve things. Also, if you find this practical and beneficial, please share with your friends or people that might like it as well. Okay, so before we go into digesting things, just a little bit of chronological order and what happened last week. Market actually had a nice move to the upside since the general idea that everybody got that the Feds are done increasing the rates. One thing that the Feds kind of pointed out that the cutting the rates, it's not on the agenda yet, but everybody was pretty much sure that that they're done with raising the rates, which market took as a positive thing. And then on Thursday at the conference in New York, Powell mentioned that it's too early. I'm just quoting what he said. It's too early to declare victory against the price pressure. And there's still pretty much, based on what he was saying, the market took it there's still an opening for further interest rate increases. So on Thursday, there was a sell-off on the market. And then come Friday, interestingly enough, we had a really bad Michigan Consumer Sentiment Index numbers at 60.4. The expectation was at 63.8. And market actually reacted in a positive way. We had a huge run into the closing. And that just tells us that market is back to just having a bad news is a good news, because that puts the pressure on the Feds, or not the pressure, but actually releases the pressure from the Feds to increase further. So we had the run. We'll take a look at the indices when we get there. So we did have a run. And then the last 30 minutes, it was a little bit of a correction. And guess what? After the market closed, the Moody, the rating agency, came out with downgrading. And I just want to show you right here. We can read it together. Moody's Investor Service changed its outlook on U.S. credit rating to negative from stable late Friday. That was after the market closed. The ratings firm cited the federal deficit as a key driver behind the action. Moody's retained its top AAA rating on U.S. credits, unlike the other major credit rating firms. S&P downgraded U.S. credit, if you remember that, and Fitch did as well. So in its rating actions, here it comes. Moody's says the downside risks to the U.S. fiscal strength have increased and may no longer be fully offset by sovereign unique credit strength. In the context of high interest rate without effective fiscal policy measures to reduce government spending or increase revenues, Moody's expects that U.S. fiscal deficit will remain very large, significantly weakening debt affordability. So you can find this article on marketwatch.com. And it's interesting. We'll see how this move by Moody's will actually open the market the upcoming week, and how the market will react to it, as we really had a nice run into Friday's close. Now, economic calendar, also important to mention, especially for new people. It's good to know that things are happening ahead of time, so you prevent yourself from unnecessary bad surprises, or even good ones. Sometimes you get lucky. In any event, what I do here, I pull out the high impact events only. You can check what's relevant for you and choose whatever you'd like to see. You can find the economic calendar on our web trader or the AvaGo app, or any third-party provider. It's all public information from the same source. So here, as I said, I take the high impact events, and we have few the upcoming weeks. So Tuesday, we have employment data from UK. Then we have a Swiss National Bank Chairman Jordan speaking. Actually speaks twice, according to this, on Tuesday and then Saturday again. We have GDP numbers from European Union, and our next data is probably the most important for the week. It says CPI, Consumer Price Index, coming on Tuesday from US. And just to remind us, the Feds in their decision or their policies are looking at three major components. One is the inflation, which CPI represents. Another one is employment, which mostly NFPs is representing, the non-farm payrolls. And the situation in the economy, which is a combination. One is the GDP, is one of the components of that segment. So we have CPI numbers on Tuesday, definitely worth watching and paying attention to. We have GDP numbers from Japan. That completes the Tuesday news. Wednesday, we have industrial production from China. China is not doing that great. We'll take a look at the charts shortly. Also, CPI numbers from UK, and we have a monetary policy report. I think this is from the last policy they made. Then we have PPI numbers from US, also very important, and retail sales from US as well, Wednesday also. So Tuesday and Wednesday, a lot of data. Thursday, employment data from Australia. Friday, retail sales from UK. And as I said, another speech by SNB Chairman Jordan on Saturday. So the key events is on Tuesday, CPI from US, China industrial production for sure, and for UK, CPI and PPI from US. So nice bunch of data coming. And again, just to remind us again, this late Friday action by Moody's, let's see how that decision will affect the markets when they open next week. Okay, so now we'll take a look at the charts. And let's start with China, actually. China is struggling. If you remember, we spoke about it last week, that we had a nice recovery and we were focusing on 12,200 level as a possible resistance. That's where support was before we sold, and it worked out nicely. We actually closed above the line on the 3rd of November. We stayed another day and then we just dropped. So the whole week it was red for Chinese index. And as you know, if you're regular here, that when I mention China, I mention 4 instruments. That's oil, copper, and 2 currencies, as they call them, commodity currencies, that Australian and New Zealand dollars. So let's take a look quickly. Oil has been selling for other reasons as well. That includes weakness in China as well. On Friday, oil moved up with the market running. Copper is nicely following China, pretty much 1-to-1. We had the whole week pretty much selling on copper. Why? China is one of the biggest users of copper and mostly used in construction. And as we know, the construction business and real estate development business is the one that really dragging the economy down there, besides other things. So that's the copper. And Australian and New Zealand dollar, as you could see, they've been selling. Of course, partially the reason here is the strong US dollar, of course, but weakness in Chinese economy affects it as well. So those are the instruments that went with China. Now let's take a look at US indices and try to see how they ended up this past week. Strong move on Friday on Dow Jones. Dow Jones Industrial average moved 380. We're talking about cash here. You see the futures, of course. I'm talking about the statistics on indices, on the cash indices. Dow Jones went up 391 point, or 1.2% on Friday, and ended up a week up 0.7%. So take a look. Technically speaking, we are challenging this previous resistance. We rejected it in a way. The high here was 34,303, and that was on the 17th of October, about a month ago. So let's see if this upcoming week will remaining this level, or will remain facing this resistance, or we might actually jump higher and start building support and preparing for continuation. Those are the 2 possible scenarios, of course. S&Ps, the S&P index, of course, also had a strong day, 1.6% up on Friday and 1.3% on the week. And as you could see here, similar scenario. We are facing that resistance on the 13th of October. We're at the high of 44.30 and a quarter. You know what? Let's just change it. 44.30.25. Okay, so it's the same thing. We did penetrate it. Let's see. Briefly, this is the 5-minute chart. So for 20 minutes, 30 minutes, we were holding it, and then we sold. That's S&P's. Nasdaq was super strong as well. A lot of tech companies. We'll take a look at them briefly. Nasdaq rose 2% on Friday and 2.4% on the week, the strongest out of 3 US. And as you could see, we actually broke through the October 12 high. unlike in S&Ps and Dow really rejected that level. So here we're actually facing, should the Nasdaq continue higher, we're facing the levels of September or mid-September, and that is around 15,700. So that's our indication here for the upcoming week. As you could see here, we had multiple attempts to break these levels here, around 15,700. And it looks like we're moving toward there. So let's take a look at European indices, see if they matched. They're far from being retesting that October 12 levels, but they are strong this week. This is DAX. UK index is not so strong. So they did show, especially DAX, showed a little bit of a strength, but we're not as strong as the US indices. Let's see if they catch up this week. So that's as far as indices. Again, just to remind us, we had sell-off on Thursday when the Powell mentioned that there's still an opening for further interest rate hikes. So market took it in a negative way, and then Friday, right after the data actually came out on consumer confidence, the market ran up. Just take a look at S&P 500 on the 30-minute chart. As you could see here, exactly at 3:30 p.m. GMT when the news came out, it was a huge move to the upside, and only in the last 30 minutes there was a correction on the market. So you can say that we established that the indices or the equity market ended up having a strong week due to the strong move on Friday across the board. Let's take a look at the specific stocks now. So two of them reported last week. There was Uber, good earnings. If you remember, the stock was already acting strongly into the earnings, so Uber moved higher. We are challenging now this level from June of 2021 as a possible resistance. Nice move, 2 consecutive weeks to the upside. Disney also, after struggling a lot, Disney had a good report. The stock gapped, and the very next day, on Friday, actually on the strong market, it's sold. So it just tells you, yes, maybe they got excited on the earnings, but the stock didn't move up with the strong market. So it tells you something. That's as far as Uber and Disney that reported last week. Apple. If you remember, I always mention Apple as a major indication in the market. Apple remains actually the leader as far as the market cap. It's currently, after Friday, stands at $2.9 trillion of market capitalization. The stock is strong, and if this move and in general market continues running higher, we might be retesting or try to retest here September level on Apple, which was at almost $190. We closed at $186.27. That's Apple. Now, Microsoft is catching up. Market cap of Microsoft as of Friday, after this run, is at 2.7 trillion. And it looks like Microsoft is at all-time high, unlike Apple. So a lot of it to do with AI business and other things. So Microsoft is really, really leading the board right here as far as making the all-time high. And again, market cap at 2.7 trillion. Walmart is also, let's see, I think on Friday also registered all-time high. Let's see, on the Okay, daily chart, monthly chart. Okay, so here on the monthly chart in September, the high was 165.70, and we closed at 165.97. Yes, by 27 cents. So we officially all-time high on Walmart. Actually, we were higher a few days earlier. And guess what? Walmart is reporting on the 16th before the market. So this upcoming week, Walmart is reporting the earnings, and they will also have the conference call on that day. So that's your Walmart. Facebook as well, or Meta, is showing a lot of strength. As you could see here, we're not reaching the all-time highs yet, but the stock is strong, and we're challenging now also the same picture as of S&Ps and Dow Jones. We are challenging that October 12th high. We didn't break through it yet. So let's see if that continues. Again, just to mention, very important, when the market running, the stock's definitely running with it. And it's important to see the relevant strength, like I mentioned to you on Disney. After good earnings on the running market, Disney really went down. So if the market turns around, we want to look for weak stocks. And if the market continues higher, the strong stocks will be the first one to run. So this is Facebook in the group of strong stocks. Intel continues to be strong as well. We are challenging this resistance from mid-September. We did break from October 12th level here, so it also, as far as the relative strength, Intel represents a strong stock as well. So that's our Intel. Now, pharmaceuticals, as you know, sometimes we look at them, they continue sliding. This is Johnson & Johnson, shows a lot of weakness. Pfizer as well. Pfizer just registered this week a lower low again. And Teva Pharmaceutical, if you remember, we mentioned this stock sometimes. We had a nice run into the beginning of this week. We reached the high of 955, and as the whole sector is sliding, so is Teva. We closed at 866. We're still above the $8. Now, for new people, I just want to mention why I brought up this stock a while ago. It has a tendency of traveling between $7 and $11. So we spoke about it around here, and actually had a nice run, ended up being almost at 11 at 1070, and now the correction is in play. So that's as far as pharmaceuticals. Banking stocks, if you remember last week we spoke about it, they had some kind of recovery, and they are holding pretty strong on a daily chart. JP Morgan being a leader has a nice recovery here. Goldman as well, you can say the recovery was very strong. We were at the end of October with the low of 289, and we ended up this past week at 325. The rest of them are not so strong, even though they're still holding this recent bounce back, but they're not really crazy about moving higher. So JP Morgan and Goldman are the strongest, and the rest of them just trying to sit here deciding where to go next. So the banks are still holding, and again, the idea of no more interest rate hikes is also positive for banks over here, as it is for the general market. And the last one, last actually two stocks I want to bring up. So it's GM. Now, the few issues with GM, there's some recalls of self-driving cars, also some recalls in China for the cars. And also, it looks like the deal with the unions is being rejected. So the stock, after the initial move to the upside, the whole week has been selling. Only Friday a little bit of a green. So let's see how this week plays for GM. It doesn't look so good. Not only we give away the recent week, the previous week's high, we actually closed below that. So we'll be watching GM, and definitely recall is also important, but I think the most important thing is the deal with the employees that are on strike by unions. And the last one, Tesla. Some people consider it their favorite stock. Few things on Tesla, and something that I researched. There was an article saying that Tesla started to advertise at cars.com website. So that raises the question, is it good or is it not? Are they really struggling? So I just want to present the numbers to you. In the third quarter, Tesla actually under-delivered. They delivered 435,000 units. And in the second quarter, the number was 466,000. So according to analysts, they need to deliver in the fourth quarter 475,000 units of cars to bring the total for the year, full year, to meet the guidance that they announced a while ago, 1.8 million cars sold. So some analysts saying that they move to advertise at cars.com is kind of a desperate thing just to bring the numbers up. So let's see how that works out. The stock is not really running. Just to remind you, October 12th right here, most of the stocks were at that level or higher at this point. Tesla is not really rushing into testing that level before the sell-off. So we'll be watching Tesla, of course. Now moving to commodities. Again, we mentioned copper and crude oil. Let's just take a look deeper into it. So on copper, on China moving lower, copper is really selling here. And if that direction continues, we might be facing a support around 3.54, 3.55. And as you could see here, that support was tested a few times so far. We didn't manage to close below that. That's as far as copper. Crude oil move up. Let's see if that's actually went together with the news for the general stocks. I just want to check really quick. Okay, not really, but Friday we erased the previous 2 days of sell-offs. So let's see if we are continuing. We're currently below the old moving averages, including the 200. So if we continue higher, we might be testing the 200 moving average, see if we break through it, or that will be a resistance for now. So that's as far as crude oil. Natural gas sold the whole week straight down, and we are at $3 here. That was previous resistance here. And let's see if we are holding through. We're below the 50 moving average over here. And if we are continuing lower, we might be retesting this level here of 2.88, and that will be around the 100 moving average as well. Or if we are holding this level and start building the support, we might be on the way up to retest the higher levels here. So natural gas, definitely worth watching. Just for new people to mention, this 3 key level was a very important level that we couldn't break for a very long time. Since we dipped below it, there was the beginning of the year, January 22nd, the week of January 22nd, we broke below, and a few times we tried to challenge that. First, it was the end of February, the high was 302, then all the way in August, 6 months later, we retested it again, and then only in the first week of October, we managed to close above that level, and then we had few retests. So now, after being a very long time, almost a year, I'm talking about 11 months, being a resistance, let's see if now a $3 point plays a role of support, or we might be selling back again. So that's as far as natural gas. Metals, as the market recovered on Friday, gold had a strong move to the downside right here. It got more intense after the announcement. So gold, what's next for gold? We just broke through the 200 moving average. And as you know, gold has few roles. wearing few hats. One of them is safe haven. So as the market ran on Friday to the upside, gold sold. So let's see if the market continues moving up. Again, there's a lot of opinion on the market, on the street, if you want to say it, that this rally will continue into the end of the year. Traditionally or historically, December is towards especially the end of December, something they call Santa Claus rally, when they're running the market into the highs. That's exactly what happened in 2021. And then 2022, the whole year was a sell-off. So maybe we just will go back this year to moving higher, but that will depend on a lot of things. And we just had another reason for the market to be cautious, as the credit was downgraded by the rating agency that we mentioned in the beginning. So let's see what gold is doing. Now with gold, other metals moved lower on Friday as well. So gold went 1.4%, silver sold 2.6%. Palladium continues very strong selling here. Friday alone, it went down about 4%. And I know a lot of people were looking for palladium as possible reversal. It's not happening yet. We are continuing to the downside. And platinum as well has been selling. It was very, we were pretty much vertical here. The whole week straight, huge candles to the downside. We broke through the previous support of October 6th. That was at 856. We closed at 844.8. So let's see, at some point metals might find the support. As of now, there's a strong downside pressure there. We spoke about oil, natural gas, and metals. Now let's move to Forex. And we start with dollar index. If you remember, this was last week's sell-off, and slowly this week we tried to recover. I mean, if you just look visually, we probably recovered between 70 to 80% of that sell-off. It's a nice move on dollar. If you take, of course, major currencies, they are down in the same manner as the dollar index looks to the upside. So pound is selling, was sitting right on 50 moving average. Friday was a little bit bounced to the upside. So let's see. Friday's low could be considered temporary support at least. And let's see if this week we're going to bounce here. Euro is holding strongly here. We are between the 50 and 100 moving average. Yen continues to be weak the whole week. Dollar's been strong against the yen, and we are challenging the I don't know if this is the all-time high, but at least recent high of October of last year. It took us a year to come back to that level, and we are challenging it. So the month of October of 2022, the high was 151.94, and we closed, or so far this month, we closed at 151.49. So it's about 44 pips away from the high of a year ago. Definitely will be watching. And a few words to mention. Every time we come to a decision or announcement from the Bank of Japan, there are a lot of hopes that this time they will do something. And the recent one didn't change anything. Bank of Japan is still holding at negative rates, minus 0.1%. And of course, all other major banks are at the high. I think US at 525 and others are at the high levels. So that causes a lot of weakness for yen, of course. And I think the last comments of Governor of Bank of Japan said that they don't see any increases towards the end of the year. We're almost there anyway. So yen remains weak. And I think if you take euro yen, for some reason is not yet. We're not there yet. Okay. So euro yen is moving higher towards retesting the 2008. You know what? Let's see. No, on the dollar yen, we are way above that level. Okay. So euro yen is strong, and if you run through all the pairs, they are holding strength against the yen. So yen continues to be weak, as again I'm repeating myself, but it's important to remember that Bank of Japan is the only major central bank that's still holding the interest rates negative, and they haven't done anything to change that in a long time. So that's as far as currencies, and I just want to bring the Swiss franc CHF, something that we follow almost every week. We are challenging that high of mid-October. We still didn't break through it, and let's see if we manage to do this week. And just to manage again, the three major safe haven instruments traditionally is gold, Japanese yen, and Swiss franc. So lately, gold and Swiss franc been running higher on the market sell-off, and Japan is way behind because of the reason we just stated, with the Bank of Japan not increasing any rates. So if the market continues higher, we might see the further weakening in gold and Swiss franc and Japanese yen, and vice versa. If we see the sell-off on the market, it could be triggered with this Moody's credit rating cuts and so other things that we might be facing. We have a lot of economic data coming this week, so let's see if the market will have a strength to continue into something that some predict into the end of the year, or market will sell off and continue lower. And let's take a quick look at Bitcoin. It's been strong. Currently it's trading at 37,000. We had a strong move on the 9th of November. We hit the level of almost 38,000. We're holding 37. Again, all this excitement, as I mentioned to you last week and the week before, is on the ETFs coming out, or in the process of coming out, Bitcoin-based ETFs. And I think there's also something for people that follow Ethereum. I think they are coming out with the Ethereum ETF, something similar to BITO that we have on Bitcoin. So if you follow Ethereum, you can take a look and research that. Okay, so I think we covered pretty much a lot. We're gonna have a busy week with some announcements on the economic calendar that includes the CPI numbers, retail sales from US, and other things. We have a late Friday announcement by Moody's cutting the credit rating for the US. So let's see how that will affect the beginning of next week. We have a continuation of some earnings coming out. We had a huge run on the equity markets. Let's see if that mood continues. That some hope to be rally into the end of the year, or the bears will take control and we'll start selling again. I want to wish everyone a great weekend, whatever's left of it, and get some energy, get some power, have a successful week, and we'll be back next week. All the best.